Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Alibaba's stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 197 billion market cap. They're trading at $77 a share, and they have 2.6 billion shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They had over 30 billion of free cash flow in 2021. It got cut to 20 billion in 2022. Then it jumped way up to 28 billion in 2023, down to 25 billion in the trailing 12 months. So their free cash flow isn't going up, but 25 billion is a ton of free cash flow. And they report their numbers in Chinese yuan. I converted everything to US dollars. To convert to US dollars, you can just divide by 7. When we look at their financials later, it will be in the local currency. Net income is the profit or loss on the income statement. It's revenue minus expenses. That's also highest in 2021, over 20 billion, dropping a lot in 2022, but it is coming up in the trailing 12 months, nearly 18 billion. Revenue is a sales for the company, and that goes up every year. And that number is correct. They have 128 billion of revenue in the trailing 12 months. We estimated 4 years of future free cash flows. We also estimated the terminal value, it's all cash flows past year 4, that's 400 billion. We discounted those numbers back to today's and the weighted average cost of capital. We get a value of the company of $360 billion. We divide that by 2.6 billion shares. And we get a calculated stock price of 140. They're trading at 77, so they're trading at a 45% discount. It's a strong buy according to the model. Their WACC on Finbox was 9 to 10%. I even raised their WACC to 12%. A higher WACC gives you a lower valuation. And it's not surprising. This company has been really undervalued for a long time. But unfortunately, Chinese stocks generally trade at a pretty big discount. There are 41 companies in the same industry as Baba, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend a lot in CapEx, 4.6 billion. Look at Amazon, 50 billion in CapEx. They have a really good debt to equity ratio, 0.2. For every dollar of equity, they have 20 cents of debt. They do not pay a dividend. Most companies in this industry don't pay a dividend. They reinvest back into the business in the form of CapEx, or some companies buy back stock. Baba generates the most free cash flow, more than Amazon. Amazon would have generated 70 billion of free cash flow, but they spend so much in CapEx. They rank second in market cap. Amazon is first by far. And they have great price multiples. Look at their price to free cash flow, 7.9. Amazon 70, and their PE is 11. This implies it's trading at a really deep discount. They generate lots of revenue, 128 billion. Second to Amazon. Amazon is over $500 billion. And they're still growing. Their 5-year annual revenue growth rate is 23%. Look at Pinduoduo, PDD, 93%. Neg, 358%. That seems crazy high. Is that organic or is that through acquisition? Let me know in the comments. Let's take a look at the company's most recent quarterly filings. This is as of 9/30/2023. In the third quarter of 2023, revenue of 225 billion renminbi, or Chinese yuan. That's equivalent to 31 billion US dollars. It's usually a multiple of 7, so you can multiply US dollars by 7 or divide renminbis by 7 if you want to convert. It's not exactly, but it's fairly close. And that's up 9% year over year. Here's a full breakdown of their revenue. Of the 31 billion in revenue in the third quarter, 13.4 billion is Taobao or Tmall. Taobao is China's largest online marketplace. Tmall is also a huge online marketplace. But Tmall is business to customer, so you can buy from businesses. Taobao is consumer to consumer or business to consumer. So individuals can sell on Taobao, but individuals can't sell on Tmall, only businesses. 3.4 billion of their revenue is Baba International Digital. So that's retail commerce, wholesale commerce. They do control a lot of the cloud market, 3.8 billion. Amazon is the largest cloud computing company. Then Microsoft Azure, I think they're 3. Actually, Google is the third largest. Baba is 4th. Amazon is about 1/3 of the cloud market. Microsoft Azure, 20%. Google is around 9-10%. This company is usually around 5-6-7%. Let's go back to the income statement. Income from operations, 34 billion, 4.6 billion US dollars, up 34% year over year. EBITDA, 6.7 billion. Net income of 3.7 billion. That gives them an EPS of 19 cents, 1.35 renminbis. Let's take a look at their balance sheet. Current assets of 104 billion US dollars. Current liabilities of 53 billion, so their current ratio is 2. They can cover their current liabilities with their current assets 2 times. They have 74 billion of cash or short-term investments. That's about 35% of their market cap. They have 34 billion of equity securities. These are their investments in other companies, and another 28 billion of investments in other companies. Total assets, 248 billion US dollars. Total liabilities, 88 billion. Really solid balance sheet. Their equity is 142 billion. Equity is assets minus liabilities. It's the value of the company according to the balance sheet. It's the book value or accounting value. Let's take a look at their statement of cash flows. This is for the third quarter. We'll look at US dollars. They don't give a full breakdown like they do on US financials. When you look at US financials, the statement of cash flows is a lot more fuller. On an annual basis, you do get the full statement of cash flows. But on the quarters, they don't give the full information. They just show you operating cash flow, 6.7 billion. They had a cash outflow in their investing activity, 3.3 billion. And their financing activity, a cash outflow of 1.7 billion. Investing cash flow is when a company invests in property, plant, and equipment or acquires another company. Financing cash flow is when a company buys back stock. That's a cash outflow. When they issue stock, that's a cash inflow. When they pay a dividend, that's a cash outflow. Also, when they take on debt, that's a cash inflow. When they pay down debt, that's a cash outflow. Let's look at the stock on Simply Wall Street. Its last price, 78 bucks, 200 billion market cap. It's flat in the past week, up 3.5% in the past year. Let's learn a little more about the company. The company provides technology infrastructure and marketing reach to help merchants, brands, retailers, and other businesses to engage with their end users in China and internationally. They have 7 segments: China commerce, international commerce, local consumer services. So Baba owns Sinow. They're a huge logistical company. I think their current value is around 15 billion US dollars. Then the cloud segment, digital media and entertainment, and lastly, innovation initiatives and other. It operates Taobao, a digital retail platform, Tmall, a third-party online and mobile commerce platform, Alibaba, which uses algorithms to extract data, 1688.com. 1688 is only for Chinese customers. Alibaba.com is for customers all around the world. AliExpress, a retail marketplace, and a bunch of other e-commerce platforms. Fresh Hippo, a retail platform for groceries and fresh goods, and Tmall Global, an import e-commerce platform. They also operate Sinow, a network logistics services platform. Ele.me, which stands for Are You Hungry in Chinese, an on-demand delivery and local services platform. You can see the list goes on with the number of companies they own. Youku is a big company. That's an online video platform similar to YouTube, but it's much more interactive. They were incorporated in 1999, based in Hangzhou, China. It looks like they started trading at the end of 2014. Their low point was $57 a share in 2015. They broke through 300 bucks by the end of 2020. They did fall to the low 60s at the end of 2022, and they haven't gone up that much since then. It did get up to 120, but it came right back down. The stock should easily be $300-400, and if this was a US company, the stock would be $1,000. But Chinese stocks generally trade at a pretty big discount. Simply Wall Street's valuation is 104. They say the stock is 25% undervalued. 42 analysts priced this stock at 129. Their trailing 12-month revenue in 2013 was only 35 billion ren, which is about 5 billion US dollars. And look how much it's increased since then. It pretty much only goes up over 900 billion, which is equivalent to 130 billion US dollars. That's their current trailing 12-month revenue, their highest ever. And the forecast for 2026 is 1.1 trillion ren. And that's equivalent to 160 billion US dollars. Here's their debt since 2013. 33 billion, about 4.5 billion US dollars. And it's grown to 166 billion, about 23 billion US dollars. But when you layer in their equity, you can see how much higher their equity is than their debt. And they have enough cash on their balance sheet to pay off all their debt if they wanted to. You may ask, why don't they just pay down all their debt? Because they may be paying 3, 4, 5% interest on their debt, and their business returns 20, 30, 40%. Then why pay down debt? Just invest in your business and get a better return. 44% of the companies held by the general public, 40% by institutions, 14% by public companies, 1.4% by private companies, 1.3% by insiders. Masayoshi Son's SoftBank is the biggest shareholder at 14%. If it wasn't for the investment in Alibaba, SoftBank may not be in business. They made so much money on Alibaba, and it seems like most of their other investments, they lose so much money. But just a massive return on this investment can cover all the losses on their other shitty investments. Vanguard is the second biggest shareholder at 3.3%. Then BlackRock. Co-founder and chairman of the company, Joseph Tsai, owns 1.3%. He also owns a basketball team, the Brooklyn Nets. T. Rowe Price, 2/3 of 1%. Dodge & Cox, 0.6%. Bailey Gifford, a little under 1/2 of 1%. They employ a big city. They currently employ 225,000 people. It peaked at 259,000 in 2021. The stock trades on the New York Stock Exchange, Xetra, Deutsche Börse, Swiss, Mexican Bolsa, London Stock Exchange, the BATS Europe, the Wiener Bourse in Vienna, Bulgaria, Buenos Aires, the Stock Exchange of Hong Kong, the Stock Exchange of Thailand, and the Sao Paulo Bolsa. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.